To help us make sense of today's market movements, we're joined by Sandra Araullo of ATR Asset Management. Good afternoon, Sandra. Good to have you back on the show.
Good afternoon.
All right, the market seemed to have gone against the grain again versus, of course, many Asian and even the U.S. markets, which are sluggish in recent days. We ended the day also above 6,500. Good news. What do we have going for us, the equities market today?
So very specific to our market, no? What's been driving performance clearly. In fact, we've been punished by hefty discount on the pricing of the index, despite the earnings results of the third quarter. So I think it's coming into the end of the year. You have a little bit of thin volumes, low liquidity, and so maybe those market participants that are have cash to deploy, they would be pushing somewhat the price action on the index as a whole.
And of course, we're still all eyes on TEL, still talk of the town with internal and external probes awaiting conclusion for the budget overrun issue. Meantime, the stock price, 1,250, that's up 5% today. Is the PLDT sell-off over? Is it time to buy again? What can you say to those planning to enter or even re-enter the stock at this juncture?
So the price action we saw the other day, down almost 20%. Clearly, it's primarily those that are exposed and trying to capture or price in the news that came out without much detail to work with. Ourselves, we had a 2023 or a fair value target for the stock at around 2,200 prior to this news. So even if that warrants an adjustment, it's already almost 50% discounted or sold off. So certainly, if those that don't have this exposure yet are taking advantage of this rare opportunity, because it's impossible to really determine what the fair value would then be adjusted to. So, but of course, those that have rather substantial positions are needing to prudently reduce to price in this governance issue that wasn't in the consideration prior to the incident.
All right, going back to what you mentioned earlier, 2022 was a difficult year for equities. The market took a beating this year, with many investors, of course, shying away and awaiting further consolidation. But PSE President Ramon Monzon, who was, of course, on ANC Market Edge this morning, said the worst is over for the PSE and 2023 is, to quote, a very bullish year. Are you feeling it?
Yeah, I heard those comments, and actually it's comforting to hear about the pipeline for IPOs, that kind of demand. Ourselves, we have a fair value estimation for the PSEI for next year. And the reality is, from a fair value standpoint, what we think is a good price for the market, from where we are at 6.5 all the way to 8,000, it does look bullish. But we also need to mind that there are still many things that are yet to happen. Particularly, the biggest concern is the risk of recession in the US.
Right.
And if that plays out, it will derail this expectation for a bullish local market.
All right, let's take a look at the other investment vehicles given the scenario and the backdrop of recession and inflation. Now, you represent ATR Asset Management, which offers an array of investment products suitable for various risk appetites. Now, how did mutual funds and money market funds do in 2022? I mean, did net asset values also mirror the volatility we experienced?
So obviously, some funds did better than others, particularly fixed income strategies, and rightly so, because the real yields or that yield you get minus inflation is still positive. And also in terms of the movement that we've seen in benchmark yields, it's attractive from a price gain standpoint or potential price gain standpoint. The funds themselves would generally mirror the market it's invested in. What's important to note is how the active managers are able to deliver value to investors. And happy to report that for funds that are managed by ATRAM, we have been outperforming the markets. So it's also, and I like to add now, while we didn't see the kind of flows that we were expecting because markets weren't performing to expectation, it's time in the markets that is important, or that bears more fruit rather than timing the markets. So we kind of try to deliver that message to the clients, especially for the PSEI, for example. If you're a long-term investor, and by long-term, I mean 5-year investor, di ba?
And you'll probably be okay.
It's a really good time to accumulate.
All right. Now, aside from fund performance, are we seeing an uptick in investments and subscriptions in pooled funds? Because in the last couple of years, this has been an interesting question. What do you say to those who are looking for investment options in 2023 but are still uncomfortable trading the markets or getting high-risk investments on their own?
Again, no time in the market. So what we've done is we put product to market, and we've expanded the options that are available to investors across the range. You can be an institutional investor, a retail investor. We brought in, we now have access to globally managed funds. So you can be exposed to markets outside the Philippines. But that said, I think the better exposure going into 2023, notwithstanding possible recession in the US, are still for Philippine assets, because we've been languishing in this. We've been laggards in 2021, 2020, failure to launch. And if all of the risks that markets are concerned about at this point dissipate, that gives you a big runway for local assets to price in to fair value. So you have equity prices reflecting corporate earnings and improving valuations. And then you have bonds where yields are probably going to adjust lower, which means higher bond prices.
So local investments just the way to go for now. Thanks a lot, Sandra Araullo of ATR Asset Management. Thank you so much for your market guidance. Good afternoon.
Thank you.